Good day, everyone. Let me introduce myself. My name is Alistair Dormer, and I have the best job in Hitachi managing the green energy and mobility sector. Today, I'd like to explain why I believe Hitachi is so well placed in both energy and mobility and our ambitious plans for growth. First, let's look at the market and why we believe this is a great market to be in. Over the last few years, we all know the commitments made by governments around the world to move to net zero. This is driving society to build renewable sources of energy and move to sustainable mobility. Decarbonisation on its own is driving huge demand. But in the last 2 years, particularly in Europe, the need for energy security has become a priority due to geopolitical conflict, once again driving up demand. On top of these two market drivers, we now see the acceleration of generative AI, which was highlighted in Tokunaga-san's presentation. This digital revolution will require massive green energy to power the data centers of the future. So once again, we see a further driver of demand, not just for our power grids business, but for more and more green energy, where we see the potential for more small modular reactors. So in summary, more AI requires more data centers, needing more power, which must be green, on top of the demand to build more renewables, to decarbonize society and to deliver energy security. This is not just a super cycle, but a transformation of society. Looking specifically at the energy market from a numerical perspective, the figures on this chart show that electricity will be the backbone of our energy system. Electricity demand is growing at an unprecedented pace to high double-digit petawatt hours by 2050. And this electricity must come from sustainable sources. For reference, 1 petawatt hour is 1 trillion kilowatts. Currently, the world consumes around 25 petawatt hours per year and is estimated to require in the region of 50 to 70 trillion kilowatts by 2050. Personally, I think this is a very conservative estimate, but probably reflects the existing constraints in the supply chain, which we are working hard to overcome. This will require massive expansion and investment for the grid, as well as huge investments in connectivity to not only connect new renewables to the grid, but also to connect between grids to ensure the optimum usage of power. A massive, exciting challenge for Hitachi. Now turning to mobility, we see steady, if not spectacular growth when compared to the energy market in the global railway market. That said, I am massively excited about the potential of our recent acquisition of Thales Ground Transformation Systems. You can see from the chart on the right-hand side that this acquisition is extremely complementary to Hitachi's existing market presence and opens up new opportunities for GTS technology with our existing footprint and a whole new customer base for Hitachi's technology, not just in rail, but for other Hitachi technologies such as digital. Moving now to our plan for FY24, we have driven hard in FY23 and had a very successful year. For FY24, we have set more aggressive targets. Nearly 400 billion yen growth in revenue, nearly 100 billion growth in earnings, and a margin at 8.6%, which is 2.1% growth from last year. We have invested heavily in operational excellence and efficiency, which will start to pay back later in FY24. We have focused very hard to improve the quality and profitability of our backlog, and through rigorous governance and working very closely with customers to change business models and reduce risk. For example, in energy, we have been able to secure long-term framework contracts to standardize designs, minimizing construction or EPC risk, and even secure manufacturing capacity reservation agreements and down payments to enable us to invest in capacity. So let me start first by talking about Hitachi Energy. This slide shows the huge growth of the backlog in Hitachi Energy. The backlog of Hitachi Energy has tripled in the last 2 years to 4.7 trillion yen. But more importantly, we have been able to steadily improve the gross margin of new contracts whilst declining to take risks that we cannot fully manage, such as civil construction, etc. Behind this is the improvement in our governance. As chairman of Hitachi Energy, I have a very experienced board of directors challenging the executive with strong insight and ambition. In addition, we are working hard to strengthen our portfolio to increase our service and digital business. Looking now at service, we have an ambition to triple Hitachi Energy's service business by 2030. Our top-level strategy for this is threefold. Mobilize our huge installed base, which is over $200 billion across the globe, to provide our service and maintenance offerings. Work closely with Tokunaga-san's organization to capture growth in emerging segments, such as data centers, as mentioned at the beginning of my presentation. And finally, through the digitization of our products and services to create new value for our customers and Hitachi. A great example of the collaboration between energy and digital is the contract we signed in Japan earlier in FY23. We will deploy proven Hitachi Energy technology, working in partnership with digital systems and services sector to deliver software and control systems to transform the electric power system in Japan. This will deliver a fully integrated energy system for Japan, which is currently served by 10 separate utilities and opens up future potential for market management and energy trading systems that will provide a huge boost to the full decarbonization of the country. So we have a fantastic opportunity. And from July the 1st, we will have new leadership of Hitachi Energy. So let me introduce Andreas Schierenbeck. Andreas has a tough act to follow, as Claudio Fashin has done a great job to integrate Hitachi Energy into Hitachi and to build momentum. We wish Claudio every success in the future, but are also excited about the fresh perspective that Andreas will bring to the business. Andreas has an impressive record in building and digitizing the service business of ThyssenKrupp Elevators, which was then successfully sold. He moved on to energy to become CEO of Uniper, a German utility. So he has unique insight into the needs of our customers, and more recently, he has been working on the energy transition with a startup company developing hydrogen solutions. I'm sure he'll be very keen to have the opportunity to communicate with you all when he starts his role in Hitachi at the beginning of next month. The opportunity in the market is enormous, and our ambition is big. You may ask, are we ready to deliver? We are making huge investments in our capacity in human resources. Last week, we announced that we will invest $4.5 billion until 2027 to further strengthen Hitachi Energy, including organic capacity expansion, bolt-on M&As, research and development, and a huge expansion of our organization. This is in addition to the recently announced $1.5 billion investment in transformer production, which makes a total of $6 billion investment in energy transition by 2027. In terms of headcount, we will be adding another 15,000 to 20,000 people over the next few years on top of our existing 40,000 plus resources. Two examples of bolt-on M&A are EKS and COET. EKS is a high-tech power electronics and software company based in Europe, but with business in North America, focused on the battery energy storage market. With the growth in renewables and the corresponding unpredictability of supply and demand, we see a huge opportunity in energy storage. So we will build on this acquisition with our installed base. COET have advanced technology in the vehicle charging market. Once again, this grid edge application has huge potential. Watch this space for more in FY24. And now let's move on to mobility. As many of you are aware, we have pursued a strategy to grow our railway business in North America. We opened the first driverless metro in North America in Honolulu last year and are busy delivering systems in Baltimore, San Francisco, Boston, Ontario, and will soon be opening our new rail factory in Maryland. This factory will showcase a number of Hitachi's state-of-art digital technologies and will manufacture trains to meet the huge demand across North America and beyond. You can also see a significant growth in headcount this year, which is reflecting more than 9,000 colleagues joining from Thales GTS. So let's talk about Thales. At the end of May, we finally closed the deal to acquire Thales GTS. This is a fantastic business that I've wanted to add to Hitachi Rail for many years. So I'm really pleased that we've finally got there. This brings us a huge expansion in our customer base, market-leading rail control technology, and as I just mentioned, 9,000 plus rail control experts. This acquisition changes the dynamic in our rail business from being roughly 50-50 rolling stock and rail control to move towards 70-30 rail control rolling stock in the coming years, with the potential for higher margins and more collaboration with Hitachi Digital. And this is how our new railway systems business looks like in numbers. Our revenues will reach the targeted 1 trillion yen milestone with more than 20,000 employees, 12 manufacturing plants across the globe, and we will have significant coverage of the global key markets. We have a strong focus on post-merger integration, where we are mobilizing lots of lessons learned from our past M&A, including the highly successful integration of Ansaldo and ABB Power Grids. We talked about power grids, we talked about mobility, but we've got more businesses that are vital to making the world more sustainable. With the ever-growing electricity demand, we believe that nuclear plays an important role in the energy mix. The market in Japan is finally restarting, as evident in the recent completion of fuel loading of Kashiwazaki Karewa Unit 7. And looking at the global market, we are the top runner in small modular reactors, which we partner with GE Vernova through our joint venture, GE Hitachi Nuclear Energy. Following the technical collaboration agreement signed last year, we are supporting GE Hitachi, working very closely with partners in the US, Canada, and Poland to develop a standard design SMR, targeting the start of operation of the first unit in Darlington, Ontario, Canada, around the end of this decade. Hitachi Power Solutions has been building on its strong energy asset service network and capabilities in Japan. We are deploying and managing energy assets and digital technology as a service to our own factories, and now also to our customers. Today I talked about different investments we are actively making in our capacity, human resources, M&A, but of course we need to reimagine the future in 2050 and beyond to stay ahead. This is why Hitachi is committing our best minds to develop new technologies that will drive the transition for future opportunities. This investment is more than 0.8 trillion yen in research and development during our current midterm management plan, and a large proportion of this investment is focused around our green business. In other words, green energy, green mobility, and the digital enablers. So finally, I'd like to leave you with our future ambition. Continued top-line growth. We are investing heavily for expansion. Continued margin expansion as we transform the portfolio through the Thales acquisition, drive ever greater volumes, target tripling service and digital revenues, and delivery of an ever-improving backlog. This is a great time to be involved in energy and mobility. Thank you.